The markets are firing on all cylinders. Kevin has never been more wrong about anything in his life. We're going to discuss all of that and much more today on Money Never Sleeps. Welcome back, ladies and gentlemen. Excited to have you with us today. Before we get going, do us a favor, hit that like button, subscribe to the channel if you haven't yet. Nothing Kevin or I say is financial advice. For the love of God, please do plenty of research before executing any sort of buys or sells, whether it's crypto or TradFi or, these days with a loaf of bread. But do your own research. I'm excited to get into it today with, hey, things are expensive, man. Okay, I just went grocery shopping. It's still expensive out there. All right. I don't care what these surveys are saying, but
it's a bull market.
Kevin, it is a bull market. Kevin, I'm just sitting here fully aroused looking at this NVIDIA chart, up almost $20 on the day. We're going to look to be closing over 590. Maybe by next week, we're going to be at 600. I'm not going to say that you owe me a huge apology, and I'm not going to victory lap anything right now because I know that things can turn on a dime. But good Lord, is it a good day to be an NVIDIA shareholder?
Absolutely. Congrats, man. It is what it is.
I did a lot of hard work to get to this place, right?
Yeah, you and every other asshole with a couple $100 back in May. You guys did really well. Except you've been on this journey way longer. I'll admit that.
Hey, I've been on the NVIDIA train since 2011. Okay, don't give me any of this. I got lucky after 6 months thing.
No. Some other people have, but regardless, it's like, yeah, NVIDIA's done extremely well. At least the stock price has done extremely well. I'm not even going to fight NVIDIA at this point. Maybe this is me capitulating, is it? Who knows? I'm not going to buy any. Maybe I should. But
February 21st, we get earnings, and we'll really see if this move up was warranted or not.
Again, it's so hard for me to talk shit about NVIDIA because obviously the price just keeps going up. But at the same time, when I look at how $1 trillion, it's over $1 trillion now, obviously, right? The market cap. Yeah. It's over $1 trillion. And you see the
1.46 trillion.
Whew. Yeah, man. You see the structure of how that chart is just building on top of itself. It's like, is this sustainable? And I'm not saying Enron because I know a lot of people are saying NVIDIA is the next Enron. I think the charts are very interesting because I do think that there is a significant pullback coming in some point in the future. I don't know if it's sooner rather than later, or what's going to actually drive it. It's going to be really interesting to see what that is. But it just seems like right now, and it kind of with the entire market right now, when you see all-time highs and you see the tops being bought, it makes a lot of sense. It's like, yeah, of course, there's mania right at the end, at the top of the market, because that's when everybody buys in, right? Once there's no one else to buy in, then it kind of stops, and then you're left with people who have positions to ride this way all the way down. So I'm not saying this is the top for NVIDIA. I don't know what the top is. That's up to Nancy Pelosi to decide whether she opens some puts or whatever. But I think that this has been a great run. I'm sorry I ever talked shit about you, Jensen Huang. I still don't like you, but for anyone who's had NVIDIA this long, congrats. I just think that tech right now.
Be nice. Hey, be nice to him. He's a good man. All right. He's taking good care of my family. So you leave him alone.
Nah, I respect you more than Jensen. But what I'm saying is pretty much tech is extremely overbought here. And I think a lot of people are buying tech and they don't necessarily know why they're buying tech, or I don't even know how some of these earnings are going to be justified with the current stock prices. Like, I don't understand how Meta's at $384 as we speak right now. What has Zuckerberg done since? If anything, I can only explain this in the way of Elliott wave theory. I can't explain this in any
there is
way.
the tremendous success that was Threads.
Oh, dude, fuck Threads. Remember how they remember when they were saying like, oh yeah, this is the fastest growth ever? It's like, yeah, no shit. Anytime someone logged into their Instagram account, it gave them a free account. It's like, no shit, of course, that people are gonna freaking it was going to grow that fast. It's so stupid. And that's the type of bullshit that we lied to ourselves about in 2023. And then here we are at outstanding numbers in, the earnings. The price right now that we have to look for earnings to see if this is justified or not. You know, I'm going to pull Meta's chart real quick just because this bothers me. And I can only explain this in Elliott wave theory, Meta specifically, not NVIDIA, but Meta, because what the fuck has Meta done other than threads and lose billions of dollars with the metaverse? And I don't know, that's it, right? Oculus maybe. But this is what I'm seeing. And I think it's a massive ABC corrective pattern, right? We have 5 waves up here from, you know, we could say the bear market of 2018 all the way up to here, but this looks like one massive corrective phase. I mean, we could even say that this is 5 waves looking at this in the longer term time frame from even 20, I don't know when they come onto the market, 2011, 2012, 2012. But this to me looks like, all right, we came all the way down here to about 70 something dollars. Now we rallied all the way back to 384 in a span of, let's say, a little bit over 12 months. What has happened in months other than something was extremely undervalued at a given point? I can't tell you what thing that they've done. Threads isn't a abomination now. No one uses fucking Threads, right? I mean, I haven't even. I think I deleted the app from my phone 2 days after I signed up for the account. I was like, I don't need this fucking storage space. But it just seems that this is out of control with some of these tech, just not predictions, but tech current value of these companies. I want to look at Apple as well because we didn't get a chance to talk about it too much yesterday, other than just talking shit about what Bank of America did to bring the price up this quick. But if we look at this, I mean, this is 100% a double top here on Apple. But if we look at even in the shorter time frames, it's like we have a massive gap up here. We have another gap here. We filled this gap to the downside. It's like, okay, technically that makes sense where we are. But at the same time, the entire market, all the indexes are at all-time highs. Apple, I don't necessarily know how strong they're going to be come earnings season because we know that they've had trouble with the Apple Watches. There is apparently a DOJ case that's going to be filed against Apple and Tim Cook. I don't know if that's true, but it's supposed to come by March that they're already anticipating that. And the other thing when I look at, Apple here is that there's a lot of trouble in China where these sales cannot be that great, right? But we're not pricing that in yet. I think the earnings are going to be the thing that kind of sets us on back on track of reality. Just looking at the S&P right here too. I mean, this is up 1.22% today. It's all-time highs. I mean, it's just above a double top. Look at the NASDAQ. I mean, just above a double top right there. It's a little bit higher than that. Keeps going. Dow, just above a double top, all-time highs. But then you look at something like the Russell, which is pretty much telling us what the economy's doing. Let me just get rid of some of these waves because obviously it's crazy, but it makes a lot of sense when you look at it. This is the Russell where it currently is, and this is where it was. So there's definitely a huge discrepancy in the market between what's overweight and what isn't. And I'm seeing that tech, which carries a good chunk of the S&P, carries all of pretty much the NASDAQ, is driving this market up. But we don't necessarily know how profitable these companies are. I think we're out over our skis when we look at some of these indexes, some of these companies. And if we have even in the slightest pullback in, say, Tesla earnings next week, or Apple eats shit on their earnings, or even NVIDIA, it's good, but it's not great, and they pull back a little bit, I mean, these indexes are probably going to start moving. And here we are at all-time highs, and everyone's buying in at the top of the market. It's a very dangerous scenario, I think, across the board, and I'm just not sold on it. I mean, I can't go back on what I'm seeing when the structures make sense, but I guess the reasoning and rationale for what's going on in the market do not.
I mean, I'm just sitting here and just looking at these charts, and then just the numbers just, Kevin, they keep going up. I don't know what to think. I don't know what to believe anymore. Is this? I don't know if this is. Yeah, I don't know if this is max like peak euphoria yet. But it feels like we're getting there.
This is OpEX, and that's I mean, it makes sense that people who are in the money wanted to be even more in the money. I don't know if that's because they anticipate more OpExs to be more out of the money and they have to start buying different contracts. It just seems like it lined up perfectly with this. And again, we haven't really got any major earnings this week. The only ones that we got were a lot of the bank earnings, and every single bank has missed on their expectations pretty much. I think the only one that was either Morgan Stanley or Goldman Sachs. One of them did really well.
But here's the question. Does anything even matter anymore?
That's what I'm saying, man. Right?
Like, I don't
didn't matter last year either, though. It didn't matter last year.
I don't know. I don't even know. Like, I'm looking at Tesla here, and the market is pumping when Tesla is able to erase the giant hole they put themselves in this morning and be back to even on the day. But I mean, we got Tesla earnings next week. How is that really going to look? Is this been, it's very oversold on the daily. Is this what it looks like? Are bad numbers like priced into Tesla right now? I'm not really sure. Like, I don't want to buy it at this point, but it's just gotten so battered over the last just 3 weeks that maybe everything is priced in for this short time frame. I'm not really sure.
I just don't buy it when I look at Tesla. And again, I think how many people right now are able to get a loan from their bank and buy a vehicle, right? I think that's the thing we have to ask ourselves. And if the answer is, people aren't getting loans from their banks and buying these vehicles, then that means that there's probably going to be unemployment for some of these companies that aren't doing as well, some of these higher priced items. I think that has to come out in the earnings, and that has to be something that kind of precedes, okay, we got bad manufacturing data. We anticipate unemployment to be rising in that sector, also in the services sector. Now earnings are eating shit, and we're seeing companies lay off. Discover Financial had a bad day a few days ago with earnings, and they laid off 108 people instantly today. We're seeing all these other companies. Sports Illustrated fired their entire staff shortly before the show started.
So they're shutting it down.
Yeah, I mean, we're in a really weird state right now, and I think this is not you. Maybe it is euphoria. I don't know. I'm not going to be saying that, but I do want to look at one thing that's really interesting about these double tops, because I definitely put double top on the thumbnail. I want to take a look at the S&P and the last time they had a double top within a given period of time, right? So obviously with double tops, I think with ABC corrections too, a lot of people think that it's going to come down to this neckline down here. Or this, I guess, inverted spike to the downside where we found ourselves at 34,947, right? So people would think that A, B, C, that's possible. It is, but I want to take a look at something that happened roughly 15 to 23 years ago, 24 years ago, something like that. And that was obviously 2008, but 2008, the period from 2000 to 2008 was actually a double top, and we don't necessarily recognize it because of how much we've gained in the 15 years that followed. Please tell me this isn't mania when you look at what happened back in 2008, and that was a crisis. Look at it now, how much fucking money's in this market. So if anything happens, yeah, it's going to be a damn crisis. But if we look at this neckline here, or I guess the double top what we got here, all right, double top came all the way down. I mean, this is obviously the dot-com crash, so it's more significant of a push to the downside than what we got back in 2022. But that's a 50% retracement. And then it took all that time to finally get back up here. And then once we did get back up there, we put in a little bit higher of a high. And then in the months that followed, we were down 56% in from 2007 all the way down to 2008, 2009. So the interesting thing about this, and I want to put this into perspective because we haven't had a double top in the S&P since, I mean, this is our double top at this point. But when we were down here, what happened? Well, in the period from 2004 all the way to 2007, we were seeing the Fed in their rate hike cycle, right? So it's really interesting to see that. And they cut it in 2007, and that was literally the height of the market. I don't know if the Fed's going to cut in March or May at this point. Who knows? We're going to see. But I think that things are definitely pushing to the point where it's like, okay, we were at the level that we were back in 2000. We haven't seen this in roughly, 7 years. What do we do now? Do we push higher or do we sell? Right? This is a key level of resistance that people are going to definitely be positioning themselves against. I think that the situation is very similar. I don't necessarily know if it's going to drop, as fast as it did back in 2007 to 2008, 2009 lows. But I do think that once we get these all-time highs, it gets in the market, and at least the psychology of a lot of people, and by people, I tend to mean, institutions. Hey, let's take a little bit off the top, right? We're at all-time highs here in a bull market. We hit this. Okay, now we're in a bear market. Bull market. All right, now people are starting to default on their homes. Now there's a lot of delinquencies. Subprime mortgage gets to the point where the banks are now having problems, and then they finally come down. And what are we doing right now? We're seeing credit card delinquencies. We're seeing elevated rates, and we're seeing the banks are in a lot of trouble. So I think there's a very similar setup. And the last time we've seen this double top was then. We haven't seen one since. It's been 15 years. And now that we're here, it's like, what are we expecting? Are we expecting it to keep pushing up higher, or should we expect some type of double top? We start to sell off. I'm more in the case that we're probably going to see this stay a little bit higher than where we were back in December 2021. We could trade a little bit above it. But I think that given what has happened, pulling up the stochastic RSI, looks like we have plenty of room to the downside. I'm going to make a conviction bet here. And I think that in the weeks to months to come, we're going to see at least a 12% drop in the S&P. That's kind of a bold statement. That's 400 and something points, but let's take it from where we currently are, down 12%. 12% is right about here. That would fill all these major gaps that we gapped up to the upside in the weeks, in the past few months since October, the October lows, right? So I think that there's a good chance that we could absolutely wipe away a lot of the gains that we made recently. Earnings season could be the reason. I think that there's also a lot of problems in the banking system, which we'll get into in a second, but there's a good chance that these double tops do mark the height of a market. It definitely, this is the all-time high at the given point. We haven't seen it in over a year or two. Here we are back again. Now what happens? So I think it's definitely going to be a question for a lot of institutional investors. Are they going to build positions here, or are they going to let it run up a little bit higher? I think we're at a point where it's psychologically going to be pretty hard to push up much higher than where we currently are, because, hey, we're back where we were. Maybe takes them off the top. We know that all-time highs do tend to be all-time highs because right after we hit them, they sell off so that, the price doesn't go up higher than what it just was. So just something to think about.
All right. Sorry, I got distracted for a second. My neighbor across the street just walked out to his truck wearing like a big Lebowski robe, and it's like 20 degrees out. I don't know what the fuck is going on around here. Anyway, the dude does in fact abide. I mean, you want to go into crypto now? We're seeing a bit of a bounce today. Bitcoin got down to, I know that you did the show with House yesterday. Bitcoin got all the way down to 40.2. Bitcoin did. Now it's at 42 even. A little bit of a bounce there. Will it continue back in this direction? TBD. But let's touch on crypto before we wrap it up for the week.
Absolutely. And then I want to take one look at something else before we head off. But here's it's 5 waves down. Wave 1, wave 2, wave 3, wave 4, wave 5. We're due for a bounce in crypto. I think that we are going to put in a little bit of a higher high over the weekend, just perfect for the markets to open up on Monday. I also think that the ETFs are now trading options today. So that's really interesting to see. So I guess people are probably going to take some of those shorter term options and maybe bet on the weekend, see a pump in the market, and then they are in the money come Monday morning. Gotta love this market. There's lots of ways to make money, not holding any of the assets, just betting on them. But yeah, I think that we are in a pretty good move for an ABC correction move to the upside. I think we're going to see a little bit higher, maybe get rejected right here at the 200 EMA, come down a little bit, push up a little bit higher, maybe even extended, right? I think 45 is going to be an interesting level to see if we get up there. This is a little bit, this is the hourly, so I can push this around a little bit here. But I think 45K is going to be an interesting level to see if we get to. I'm really torn. If we don't get above 45 and we then retrace and start doing 5 waves down, I highly doubt that we're going to break 50, and I highly doubt that we're probably going to retest the highs that we've seen in crypto. So that's something to keep in mind. I don't anticipate this pump to be massive, but I do think that it is going to be a couple thousand that we're going to see on Bitcoin. And the interesting thing with Bitcoin too is that the daily stochastic RSI is extremely oversold, so there is room for it to go up. But again, we're going to have to see how fast that reacts, right? If this doesn't react fast and we see that, Bitcoin's price is still going up, probably tells us that we are going to head for 50K, but I don't necessarily buy it. If we start seeing the stochastic RSI get up extremely fast over the next few days and Bitcoin's price is around 40, 45K, I'd probably anticipate that would probably sell off at a given point. And with what Grayscale is doing, they're just offloading crypto like crazy. I wouldn't be surprised if they're just taking every opportunity to sell into the pump, right? So we're going to keep an eye on that, but I think 45 is going to be an interesting level to see over the weekend. If it goes higher than that, obviously 50K is going to be on the table. You can see the ETFs are also doing pretty good today. They're all up. They're all in green. We're seeing 3% up for IBIT, 3.08% for ARK. HODL's up 2.89%. So they're all doing pretty well given that Bitcoin's price is up. I think it's also the fact that the market itself is up. I mean, everything else is pretty much in green today, except for a few things. But yeah, I think the crypto market right now is going to be really interesting to watch over the weekend. Let's take a look at CoinGlass funding rates and all that stuff, just so we can keep an eye and see how people are trading this. Because if we do see negative funding rates, which I haven't checked yet, there's probably a good chance that we are going to see a bit of a squeeze. Let's pull this up. CoinGlass, there we are. And we can see that it's pretty average. It's nothing noteworthy. ETH being shorted a little bit here, Solana being shorted, kind of. XRP is being shorted, kind of just watching OKX. Binance is definitely, I'm not getting too concerned with that. But across the board, it looks like people are either long or there's a few alts that are starting to get short. Keep an eye on the alts. I think the alts are going to have a good weekend if if Bitcoin only gets to 45K or if Bitcoin stays at this range. I think the alts do have a good leg up before they see any type of correction. I think they have to finish those wave 5. So we could see like an alt mania. I would assume, just given where Bitcoin's currently sitting, given what the Bitcoin dominance levels are. But let's take a look at liquidation maps real quick. Bitcoin, you can see that for Bitcoin, the liquidation map, there's a lot of liquidity sitting up. Look, just like I said, up to 45K. So, if we get to 45K, that's $3.68 billion that we could wipe out. That would also probably cause a lot of people to go long right there. And that just builds up the liquidity to the downside, right? There's a lot of supply that's still out there that people are, I guess institutions are willing to sell, especially in this range. So I don't necessarily think if we pull up the 30 days, probably not a lot of liquidity north of here too. 46K, nothing too crazy, but you can see that there's no liquidity down here because everyone right now is max short. That's where they're all sitting. They'll go max long, and then that's where they'll be put when the price is 45 or so around here. So keep an eye on that. I think the liquidation map is telling us that we are going to go a little bit higher before so we can build some of those positions below, and then take them all out in one foul swoop, as Jay Webb taught me how to say. Or fell swoop. Maybe I didn't learn.
Fell swoop.
Fell swoop.
One fell swoop.
One swoop de doop de loop. But yeah, I don't know, man.
All right, let's keep it moving.
All right, bond market. Let's take a look at that because that's interesting. I'm just gonna go over this lightning round real quick.
No one's ever said that, by the way. No one has ever said the bond market is interesting.
Yeah, you're right, because it's being a pain in the ass, and it's being a pain in the ass for the banks more than anything, right? Let's pull up the daily. This is the 2-year. You can see that the 2-year has been going up recently, and it's not necessarily great because it's going up faster than the 10-year. We got the death cross on it. Let's do it just for because it exists. It's bullish if you get a death cross on the yields, right? And the market's going up. But I think a lot of this has to do with the fact that people are cutting their expectations for rate cuts. They're probably not expecting any in March, probably very few percentage in May. I think a lot of people are expecting that inflation's coming back. The bond market's kind of pricing that in. I wouldn't be sold on that. I think that if anything, this is killing the banks because the banks need those rates to come down significantly. And this kind of lines up with what's happening with the bank term funding program, which we'll pull up in a second. But you can see that the 10-year, it was about to get a death cross. It broke above it. I think this is more of a corrective pattern. You can see that on the daily. The yield is overbought. I don't necessarily know if it's technical analysis. You can go with that because sentiment changes. This whole thing changes. But I do think that we're going to get the death cross on the 10-year. We'll be ready to play that video when that time comes. But I think right now what we're seeing is a bit of a sell-off in the bond market as equities are going up. People are anticipating that there's not going to be any rate cuts. I'm telling you right now that the rate cuts aren't going to come because the Fed feels ready that the inflation fight's over. It's because they fucked up and something is completely wrong in the system. And you can see that we're still, we got a double top even here in the 10 to 2-year reversion. This is probably going to go down a little bit before it sees another pump to the upside. You can see that it's quickly getting out of the overbought territory in the stochastic RSI. I wouldn't be very surprised that if earnings start to get really shitty, this wouldn't be reverted by mid to late February. So I would anticipate mid-February we could be above the reversion level, especially if earnings come back, we get some bad data. I think that's going to have the bond market pricing. It's like, okay, unemployment's going to probably rise. Guess what? Let's get ahead of this right now. And, I think the yields are going to be dropping like crazy. That would also probably offer a really good opportunity for people who are buying the tilt. You can see on the daily, it's completely oversold. I don't necessarily know if this is just one massive wave one and we have a lot more, but I do think that the yields are going to come down significantly. I don't care what anyone says. Even if they're going up a little bit here, there's going to be problems ahead because what we saw last night was very dangerous in the markets. The reverse repo has been going up a little bit. So, that happens from time to time. But the one thing that's been going up and probably shouldn't be going up, but they wanted to now, is the bank term funding program. This thing is up 14 billion on the week. That's almost 9.7 something percent, I believe, that it's up. And the problem is this thing expires on this red line. Let me even make this a thicker red line. But this price gets there, that's a problem. That tells us that's when this facility ends. And this is pretty much all the banks that were hurting from Silicon Valley are borrowing from here, and they get a borrow window where they have to pay it back 1 year after the borrowing date. So eventually it will be done by March of 2025 completely, but the window to borrow from ends on March 11th, 2024. Now, what we heard last night was that the Fed, the OCC, and the FDIC were all telling the banks, encouraging them to borrow from this facility. Why is the FDIC telling these banks to borrow from this facility? Is it problems that they're expecting when it comes to insolvency concerns? Possibly, because we know the reverse repo is on its way down, and they're probably anticipating that it's going to dry up around the same time. But the FDIC makes sure that pretty much anyone who has money in the market in these banks is able to withdraw them up to whatever it is, 250K. I think some are even up to 2 million depending on the institution, but 250,000 is the level that each person is insured up to. That insurance must be scaring the FDIC, because if they're telling all the banks to pretty much do this, that tells me that there's probably some type of liquidity concern in the that they anticipate after this window closes, especially if the reverse repo closes as well. The banks are, their stocks right now are relatively, I mean, if we look at this compared to where it was back in 2022, they're down significantly. They're doing the opposite of what's happened in the tech rally. So tell me that if there's a banking concern, we're not going to see something very similar to what we saw in 2022 all the way down to the low in 2023. I think there's a good chance that it's even worse if a lot of these banks are too big to bail, or a lot of them start having unrealized losses that just keep going up. And you know that these yields in the bond market, if they keep going up, it's not a good thing for the banks. If the rates don't come down, it's not a good thing for the banks. These unrealized losses are going to continue to mount. I think the FDIC, the OCC, and the Fed all know this. They can't keep the bank term funding program facility open. I mean, it's going to get to the point where rates are going to have to come down because they need to save the banks, because I don't think the liquidity is going to be there. And all it takes is one bank to go on a run, and you're going to start seeing a lot of them. And the way banks go on bank runs, one person knows something that other people don't. They tell all their friends. Next thing you know, it kind of spreads like wildfire across the entire banking industry. So there's a lot of things you have to keep in mind going forward. I don't think that this is a sign at all. And obviously, the markets are not going to react to it because they choose not to react until it's too late. But I mean, this thing is fucking parabolic. This is a hotter chart than NVIDIA at this point, how much it's just going straight up. So I think there's a lot of danger ahead with earnings, and then post earnings, we have all these banks that are probably going to have to find a new way to facilitate operations from day to day. And if there's anything, I think the correction is not too far off. I mean, I say that because obviously the longer we go without a correction, the more likely we get a black swan event. And with us being at all-time highs and not seeing any correction just quite yet, tells me that we're probably going to be in some type of surprise for something this year. I don't know what it is. Maybe it's the banks, maybe it's earnings, maybe it's something we haven't even came up with, or they haven't even found to be an issue. But I think that we are definitely seeing really bad things happening behind the scenes, and the market is just not reacting.
There's the Hang Seng.
Let's just wrap up.
Had to see it.
This
is where we'll end for the day.
Yeah, no, this is the last thing. The 10.3%, it's down to start the year. And they banned short selling in China for individual investors from the largest brokers. So what does that tell you? That tells you that individuals aren't able to make money profit from the short selling. So if that's the case, there's most likely what we've seen is that in the days that follow, in the weeks that follow, that people just start selling off, because a lot of what happens with short selling, people buying in, or at that point it's just covering their positions. If they can't do that, then well, they just have to sell at that point. Being down here is a lot of knife catchers. I don't think this historical level of support is going to hold very long. I think it's a bit of a dead cat bounce, to be honest. The fact that we had that green day and then it was met with a red day right after, it's still up a little bit from this bottom, but I think that the fact that it closed on the week in red after they banned the short selling, we know that Evergrande is coming up in literally 10 days, their restructuring meeting. I think China is going to be leading the way for a lot of problems going forward, and the United States is probably preparing for that with, telling the banks, hey, we need liquidity more than anything right now. Make sure you have your houses in order.
Okay. That is how we're going to wrap it up for the week. The vibes on the market are high, but we got good old wet blanket Kevin over here to make us remember that shit is not as pretty as it seems.
I will say this. Let me just say this, because it's really hard to be in a market and, being logical and doing this much research and say, you know what, maybe I am wrong. But the second you question yourself, that's when the market decides to turn. So I think, if anything, again, there's definitely a plan to have cash on the sides in case you are wrong, and in case I am wrong. But at the same time, see it through, because if you don't see
I'm
it
just
through,
giving you shit. I'm there with you, man. Like I'm
I mean it for
enjoying
everyone.
the write
Everyone
up.
needs to.
Yeah,
Yeah, I think it's just a good
I'm
thing to
enjoying the
remember.
write up. But man, I'm happy to have cash on the sidelines, just waiting for an opportunity because I think we're still going to get it.
Absolutely. And the problem is when people get too heavy on one side of the trade, it comes down faster than anticipated, right? It's just, you have to kind of, if everything's pointing towards, smoke in a burning house, there's probably a fire somewhere. It's just a matter of time before everyone else sees it. That's the only bad thing. So just stay vigilant with the market. Don't get caught up into it. Stack cash, keep working. I mean, that's just kind of my plan at this point. It's too hard to buy in at the all-time high, because then you know what happens. You're probably going to see the all-time low pretty soon. Not all-time low, but cycle low.
Stack that paper, time travel back to 2012 and buy NVIDIA when it was $15 a share, and then you're good.
I wish. Yeah. Oh, the other thing before we wrap up, the dollar has been extremely strong as the market's been going up. That doesn't make a whole lot of sense. So keep an eye on the DXY. I think that's going to also be really important if the equity market does decide to see a sell off.
Appreciate that, Randy. I know you're here. Kevin's here to teach you. I'm here to entertain. Chris Hoddle, shout out to you as well. Thanks for being here. Man, Sports Illustrated back in the day. What a time to be alive that was. But the internet kind of killed it. You know what I mean? All right, everybody. That's going to do it for our shows this week. Appreciate you being here with us. If you have not yet, hit that like button, subscribe to our channel, drop a comment, share us out on social media if you enjoy what we're talking about. Have a great weekend. Stay safe in the markets. Stay safe in real life. Have some fun. Disconnect for a bit, and we'll see you next week.
Take care, everyone. Have a good weekend.